Hey everyone! Are you getting ready to take your life insurance exam through Pearson VUE? Feeling a little nervous? Don't worry, I've got you covered. Today, we are tackling 21 essential practice questions that you need to know before test day. We aren't just memorizing answers here. I am going to walk you through the explanations for each one so you can walk into that testing center with total confidence. Before we start, make sure to smash that subscribe button so you don't miss any of our study guides. All right, let's get into it. All right, let's start with question number 1. A temporary license issued due to an agent's death or incapacitation is valid for blank months. A. 9. B. 3. C. 12. D. 6. The correct answer is D. 6 months. Temporary licenses issued due to an agent's death or incapacitation are valid for 6 months. This period allows for the necessary transition and continuity of service. Validity periods of 3 months, 9 months, or 12 months do not apply to these temporary licenses. Moving on to question 2. If an applicant needs to make a change to an insurance application after submission, the change must be A. Initialed by the applicant. B. Noted by the insurance agent in their report only. C. Emailed to the insurance company. D. Approved by the insurance underwriter. And the correct answer is A. Initialed by the applicant. Why? If a change needs to be made to an insurance application after submission, it must be initialed by the applicant to verify that they approve the correction. This ensures the accuracy and integrity of the application. Noting by the insurance agent in their report, A. Approval by the insurance underwriter, B. And emailing to the insurance company, D. Do not provide the necessary applicant verification for changes. Here is question 3. Mike has a life insurance policy with a facility of payment clause. He dies without naming a beneficiary. Who is likely to receive the death benefit? A. His creditors. B. The insurance company. C. The state government. D. A person or entity chosen by the insurer. The correct choice is D. A person or entity chosen by the insurer. In the absence of a named beneficiary, a facility of payment clause allows the insurer to designate a person or entity to receive the death benefit. This is typically someone with a valid claim, such as a close relative or someone responsible for the insured's final expenses. The insurance company, his creditors, and the state government are not typical recipients under this clause. Let's look at question 4. The Fair Credit Reporting Act mandates that applicants must be notified of blank. A. Policy pricing models. B. The use of consumer reports. C. The insurer's financial status. D. Their credit scores. The answer is B. The use of consumer reports. The Fair Credit Reporting Act requires that applicants be informed when consumer reports are used in the underwriting process. This transparency ensures that applicants are aware of how their personal data is being utilized. Notifying applicants of the insurer's financial status, their credit scores, or policy pricing models are not specific requirements under this act. Question 5. Which of the following would not be considered a competent party in signing an insurance contract? A. An individual under the influence of narcotics. B. A business entity. C. A licensed insurance company. D. An 18-year-old adult. The answer is A. An individual under the influence of narcotics. Competency in signing an insurance contract requires that parties be mentally sound and legally capable of understanding the terms of the contract. An individual under the influence of narcotics does not meet this criterion. A licensed insurance company, an 18-year-old adult, and a business entity are considered competent parties. Next up, question 6. Which non-forfeiture option continues coverage with a reduced death benefit and no further premiums required? A. Cash surrender value. B. Accumulation at interest. C. Reduced paid-up insurance. D. Extended term insurance. The right answer is C. Reduced paid-up insurance. Great job so far. Here is question 7. Which rider guarantees the insured the right to purchase additional coverage without proof of insurability? A. Guaranteed insurability rider. B. Term conversion rider. C. Pay or benefit rider. D. Accelerated death benefit rider. The answer is A. Guaranteed insurability rider. The guaranteed insurability rider allows the policyholder to buy additional insurance at specified intervals or life events without undergoing further medical exams. This rider provides the insured with flexibility to increase coverage as their needs change. The pay or benefit rider, term conversion rider, and accelerated death benefit rider do not offer this specific feature. Question 8. What is a key feature of universal life insurance? A. Premiums are invested in a separate account. B. Fixed premium payments. C. Flexibility in premium payments and death benefits. D. Coverage for a specified term only. The correct option is C. Universal life insurance offers significant flexibility in both premium payments and death benefits. Policyholders can adjust their premium payments and death benefit amounts within certain limits to better fit their financial situation and coverage needs. This flexibility makes universal life insurance a versatile option for long-term financial planning. A. Fixed premium payments apply to traditional whole life insurance. B. Premiums are invested in a separate account applies to variable life insurance. And D. Coverage for a specified term only describes term life insurance. Moving on to question 9. Who is responsible for ensuring premiums owed to insurers are properly managed? A. Insurance agents. B. State auditors. C. Policyholders. D. Insurance brokers. The answer is A. Insurance agents. Insurance agents are responsible for ensuring premiums owed to insurers are properly managed. This fiduciary duty includes collecting, handling, and remitting premiums accurately and timely. This responsibility does not fall to policyholders, insurance brokers, or state auditors. Almost halfway there. Question 10. Credit life insurance is designed to A. Offer retirement benefits. B. Pay off a loan in the event of the borrower's death. C. Cover funeral expenses. D. Provide investment returns. The answer is B. Credit life insurance is designed to pay off a loan or debt if the borrower dies before it is fully repaid. This protects the borrower's family from financial burden and ensures the lender receives the remaining loan balance. Providing investment returns, covering funeral expenses, and offering retirement benefits are not the purposes of credit life insurance. Question 11. Let's see if you know your Georgia state rules. Jane, an insurance agent, receives a gift worth $200 from a client as a thank you for her services. According to Georgia insurance regulations, is this permissible? A. Yes, as long as she reports it to the commissioner. B. No. Agents cannot accept gifts over $100 related to their professional duties. C. Yes, there are no restrictions on gifts. D. No, agents cannot accept any gifts from clients. The answer is B. No, agents cannot accept gifts over $100 related to their professional duties. According to Georgia insurance regulations, Jane cannot accept a gift worth $200 from a client, as agents cannot accept gifts over $100 related to their professional duties. Accepting such gifts could be seen as unethical and could influence the agent's decisions. Unlike reporting the gift to the commissioner, no restrictions on gifts, or prohibiting all gifts, the $100 limit ensures transparency and prevents conflicts of interest. Let's check question 12. Who typically has an insurable interest in an individual? A. A business partner or close family member. B. A distant relative. C. A close friend. D. A casual acquaintance. The correct answer is A. A business partner or close family member. A business partner or close family member typically has an insurable interest in an individual. This ensures that the policyholder would face a genuine loss if the insured dies. Distant relatives, close friends, or casual acquaintances usually do not meet the criteria for having an insurable interest. Here is question 13. When are insurance companies allowed to use consumer reports during the underwriting process? A. At any time without consent. B. Only after policy issuance. C. Before the application is submitted. D. After obtaining consent from the applicant. The answer is D. After obtaining consent from the applicant. Insurance companies must obtain consent from the applicant before using consumer reports during the underwriting process. This ensures that applicants are aware of and agree to the use of their personal information for evaluating risk. Using consumer reports after policy issuance, before the application is submitted, or at any time without consent would violate privacy regulations and the Fair Credit Reporting Act. Question 14 is a specific Georgia regulation question. Make sure you memorize this. Kelly, a policyholder, wants to know the interest rate on policy loans. What is the maximum fixed interest rate allowed in Georgia? A. 7%, B. 8%, C. 6%, D. 9%. The correct answer is B. 8%. The maximum fixed interest rate allowed on policy loans in Georgia is 8%. This limit helps protect policyholders from excessively high borrowing costs. Rates of 6%, 7%, or 9% are not the maximum allowed under Georgia insurance regulations. Let's look at question 15. A blank premium annuity allows the annuitant to make a single lump sum payment into their annuity contract. A. Fixed. B. Deferred. C. Single. D. Flexible. The answer is C. Single. A single premium annuity involves a one-time lump sum payment, which begins earning interest immediately and can provide future income. This contrasts with flexible premium annuities, which allow multiple payments, fixed annuities, which refer to stable payout amounts, and deferred annuities, which delay payouts. Question 16. Which of the following is not a common feature of joint life insurance policies? A. Premiums are generally lower than separate policies for each individual. B. The policy accrues cash value that can be borrowed against. C. Coverage continues until both policyholders have passed away. D. They are only available to married couples. Be careful here. The correct answer is C. Joint life insurance policies typically end coverage and pay out the death benefit upon the first death, not continuing until both policyholders have passed away. Premiums being generally lower than separate policies, accruing cash value that can be borrowed against, and being available to more than just married couples are common features of joint life insurance policies. Moving on to question 17. What will typically happen if a minor is designated as a beneficiary in a life insurance policy? A. To ensure the minor can directly access funds at any age. B. To avoid paying premiums. C. To increase the policy's cash value. D. To allocate the proceeds to a trust until the minor reaches the age of majority. The answer is D. To allocate the proceeds to a trust until the minor reaches the age of majority. When a minor is designated as a beneficiary, the policy proceeds are typically placed in a trust or managed by a legal guardian until the minor reaches the age of majority. This arrangement ensures that the funds are managed responsibly until the beneficiary is legally able to handle them. Direct access to funds at any age, A. Avoiding paying premiums, B. And increasing the policy's cash value, C. are not outcomes related to naming a minor as a beneficiary. Just a few more left. Question 18. What is the purpose of a children's term rider? A. To add term life insurance coverage for the policyholder's children. B. To provide coverage for the policyholder's parents. C. To waive premiums in case of disability. D. To increase the cash value of the policy. The answer is A. A children's term rider allows the policyholder to add term life insurance coverage for their children under their existing life insurance policy. This rider provides a death benefit if a covered child passes away, offering financial protection for the family. Providing coverage for the policyholder's parents, increasing the cash value of the policy, and waiving premiums in case of disability are not the purposes of a children's term rider. Question 19. What is the primary purpose of juvenile life insurance? A. To protect the child's future insurability. B. To provide retirement benefits. C. To cover burial expenses for minors. D. To offer investment funds. The correct choice is A. To protect the child's future insurability, ensuring they can obtain life insurance coverage regardless of health changes later in life. This policy can also lock in lower premiums at a young age. Providing retirement benefits, covering burial expenses, and offering investment opportunities are not the main objectives of juvenile life insurance. Here is question 20. Which type of annuity adjusts the payout amounts based on the performance of the investments under the annuity contract? A. Indexed annuity. B. Immediate annuity. C. Fixed annuity. D. Variable annuity. The right answer is D. Variable annuity. A variable annuity adjusts payout amounts based on the performance of its underlying investments, offering the potential for higher returns along with greater risk. Fixed annuities provide stable payments. Indexed annuities tie returns to a specific index with certain guarantees, and immediate annuities begin payments right away, without adjustment based on investment performance. All right, guys, final question. Question 21. Juvenile life insurance policies are usually owned and paid for by A. An adult, typically a parent or guardian. B. The minor's employer. C. The minor. D. The state government. And the answer is A. An adult, typically a parent or guardian. Great job making it to the end of the video. Those 21 questions are a fantastic benchmark for the real Pearson VUE exam. I want to know, how many did you get right? Let me know in the comments section down below. Remember, passing this exam is all about understanding the concepts, so feel free to watch this video as many times as you need. If you found this helpful, please drop a like on the video, share it with anyone else studying for their license, and make sure you are subscribed. Keep studying hard, good luck on your exam, and I'll see you next time.